The following is a presentation of TFNN. The Trader's Edge with Steve Rhodes. Call now, toll free at 1-877-927-6648 or internationally at 727-445-1044. The Trader's Edge. Now, Steve Rhodes.
Good afternoon from TFNN. Welcome to the August 26th. Fantastic Friday edition of today's Trader's Edge Show. I'm your host, Stevie Perseverance Rhodes, who absolutely knows that each of us should always be pioneers of our future versus prisoners of our past. Hope everyone out there is having a great day. Let's make sure we have an extraordinary one. And, of course, the easiest way to do that, it's to always remember that life happens for us, not to us. That's right. When you and I make that one little 2x4 shift, it means we can find the gift in every set of circumstance that life is going to toss at us. Today, you and I, we're going to go look at the circumstance of these markets. We're going to go figure out what the bulls and the bears, what the buyers and the sellers are communicating to you and I at just past 1 o'clock in the afternoon. I want you to know that I'm absolutely grateful for your presence here, but more importantly, I'm here to serve you. So feel free to pick up that phone, dial on in, 877-927-6648, internationally 727-445-1044. So let's go ahead and get this show started on fabulous and fantastic Friday. Of course, this is Tiger Financial News Network. I'm Steve Rhodes, and welcome to the show. We've got the Dow trading off 62 points right now. She's trading down to 18,386. S&P is down 4 points at 2168. NASDAQ Composite off 4, trading at 5208. Russell 2000 down 3 points, trading at 1236. The DAX closed up 58 points. The FTSE closed up 21. Gold is trading up $3 right now. Silver's up 16 cents. Light sweet crude up 14 pennies out here. Leading the charge, the upside, you've got NetEase. NTES is the ticker symbol up 4%. That's $9 and change. Acacia Communications up 6% at $6 and change. Autodesk up $5, about 8% to the upside. To the downside, Ulta Salon Cosmetics and fragrances. Let's not forget the fragrances. That's down $15. That's off nearly 6%. AutoZone is off $15 as well, about 2% to the downside. Splunk is splunking to the downside. That is, how do they choose that name, Splunk? What do they do? In any event, that's not necessarily a name I would have made. I can imagine a group of people sitting around a coffee table saying, what are we going to name our company? Hey, how about Splunk's not taken? Let's go with Splunk out there. Had to be a pretty interesting conversation. In any event, it's down 10%. O'Reilly Automotive off a couple percent. Here's a company, Aceto Corp, down 22%. That's off about $5. Okay, so what are the markets doing? Man, damn if I know. No, let's go take a look at what they're doing. Very interesting trading session thus far out here. So it's going to really be all about the close, that is for sure. When I say interesting trading session, if we just take a look at the ES Mini out here, on the spike high, this is a 5-minute chart, by the way, that we're taking a look at. A spike high at 10:15 this morning, there were 68,000 contracts to the upside. Now, that high hasn't been tested, so it's hanging out there. That's 2186.75. And to the downside, you had contracts right here with this little hammer candle forming. It's just a 5-minute chart we're looking at. 65,000 contracts to the downside. So I don't know if we're going to be stuck in a little trading range or consolidation here. But the cool thing is on that 5-minute chart, that price point of 2160.75 is a hammer candle. Right? Even though it's a 5-minute, it would give you quite a bit of information that the next leg to the downside would likely be underway going into the close. That's how you'd read it after a turnaround like we've seen here thus far today. The 5-minute chart, if you're watching us on TigerTV, you can see at that not only was it a hammer candle, but you had a brand new TAS market profile that formed. It's actually a bullish, biased type profile. The reason we say that is because in this case here, I've got the light blue line, the point of control closer to the bottom of that box out there. So that says that what we ought to see take place between now and at some point in time here, we ought to see price head up to 2172.30. That is the top of that daily box. So expect at least that type of bounce to unfold out here. That's the upside. The downside, we know you could actually create some type of A to B equals CD to the downside if it takes out that hammer candle. Now, what other levels would you be watching? By the way, at that TAS market profile to get up to the, and it's really not out of the question at all. 2170 is the 0.382 retracement of the move from high to low. 2172 is the TAS market profile. That should really be the target out here for a bounce to the upside. Again, a 5-minute chart, just like we had a nice little hammer candle to the downside. You have a little shooting star out here that took place just as we were coming on the air at 1 o'clock. So we'll see if that high gets taken out. Let me tell you what that price point is. Again, these are just small little moves that we're taking a look at out here. But nonetheless, it helps to maybe frame what the market is doing. That high is 2168.75. So if that high gets taken out, anticipate 2172. You move above 2172, then look at 2176, get back to even test that swing point that had volume on that 5-minute chart. So I would be trading the 5-minute charts. We don't do that too often here, but, when we're trying to really explain, hey, explain it, Lucy or Stevie, that's what we're looking at. Now, what's the next thing that we want to pay attention to out here? I think the next thing we want to pay attention to is actually the Russell 2000. Why do I say that? I'm going to go find the page here so that I can show you why it is that I'm focused on the Russell 2000. And I think you should be as well. Actually, I'm going to switch over and take a look at the IWM. That's what we're going to do, because now I know everybody can actually do this out here. And the reason is so far, thus far today. I say so far, thus far. Probably not, but you're not going to kick me out of your grammar school. The reason is that we have not made a lower low. We have not made a lower low. What I'm referring to is really yesterday's candle session. The low out here yesterday was 122.61. So my question that I pose out to you is the Russell 2000 sending some type of message to us? So 122.61 was its low. So far today, the low has been 122.64. You might say, come on, Steve, it's 3 pennies out there. Is that a big deal? Well, the big deal is because we have not pushed lower than at least yesterday, because we haven't even gotten into the swing point from August 17th, okay, which has 20 million shares, what the Russell 2000 is actually doing right now, it's pushing highs with volume. You say, can't be, Steve-O. Well, that's it. That's what it's doing. If you take a look at the swing point out here from August 23rd, it had 21.5 million shares. We haven't tested the high. 124.46 is the number. Right now, your 124.41 has been the high out here. You're pushing into a swing point with volume on the Russell 2000. If interest rates were going up, shouldn't the Russell 2000 be one of the indices that's actually tanking? And I ask myself, well, why isn't it? And why hasn't it taken out those lows yesterday? And I just say, something to think about. Could it be that the Russell 2000 actually still wants to move higher out here? If we really say, hey, it's Friday, it's 1:13 in the afternoon, what's actually going on for the week out here? So we'll turn this to a weekly chart. Now, let's do this for the Russell 2000. Even though I have it as the actual indice, let's put when I say the Russell 2000, hello, let's put it as the IWM. And if we take a look at the IWM on a weekly chart, right, we know that the weekly charts are going to, here I got to go use this word. Somebody give me another word other than Trump, right? And I didn't mean that as a political comment, but it just seems like this is the wrong type of season to be saying, hey, the weekly chart trumps the daily chart. But it does out here. Maybe he could change his name. Supplant. Duffy, you want me to remember to use the word supplant out here? My vocabulary doesn't go. That's why I don't play words with friends, because you just would kick my royal, patootie out here. But hey, take a look at this. Take a look. The weekly chart does supplant the daily chart. And that weekly chart doesn't look bearish to me. Does it to you? We'll be right back. Hi, I'm Steve Rhodes, host of the Trader's Edge, heard daily at TFNN.com and author of Mastering Probability, a daily investment and trading newsletter service that I send out each morning by 8 a.m. My morning newsletter service covers exactly what the markets have been doing since last night's close, providing you with an edge on your trading day ahead. You get actionable trading ideas, including the exact entry, stop, and profit targets. Plus, I'll teach you the patterns and hidden market correlations that will make you a better trader. As a subscriber, you'll gain access to my 90-minute money management workshop, where I'll teach you the secrets that'll save your assets. The bottom line, I've got your back, including a 30-day money-back guarantee. See for yourself the type of analysis I provide each trading day by signing up for Mastering Probability today. With nothing to lose, this is an offer you should not pass on. Mastering Probability can be found under Trading Newsletters on the front page of TFNN.com.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, The Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com. The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN and you'll find the Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
Steve takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Welcome back, folks. Dow's off 72, S&P is down 5. So unlike the Russell 2000, which if we have a bad close today, then its candle will look similar to the SPY, the diamonds, and the Qs out here. You see how today you had the SPYs pushing into the swing point, the most recent swing point, which was August 23rd, has volume of 54 million shares. Today you've got 73 million shares. So you push into that with volume. Now what's happening is if we take a look at where the swing point is for the SPY to the downside, we're dealing with the trading session of August 4th. Well, August 4th only had volume of 46 million shares. So you're testing or you're pushing into that because you've already touched the top of that as well with 73 million shares. So we're going to have a decent volume day today. Now, you've got a gap up that was out here inside the SPY. So 216.78 could be support. But here's the deal. Here's what we likely know just in swing point analysis is that if the SPYs close below 216.78 because you've got volume, that says you're likely going to go at least test the bottom of that swing point from the trading day of August 4th, and that price point is at 214.25. Again, we've got the same type of setup here inside the diamonds, inside the Qs. Out here inside the diamonds, you're really benchmarking the August 2nd trading session, 5 million shares there. You're coming into it light today, interestingly enough. So in the case of the Dow diamonds, because that's where the swing point is at, the price point that you'll watch is 183.88. If you close back above that, you're going to get a rejection of that swing point with lighter volume. Inside of the QQQ series ETF, as we take a look at it, this was pushing higher today. Actually touched the low of the trading session of August 23rd. That low was 117.51. You got up to 117.54. That swing from August 23rd had 12 million shares. You've done 16 already out here. And if we take a look at the Qs, you know, level 1 of support out here is going to be the low of that gap up candle from August the 5th. That's 116.13 out here, and the volume there's about 23 million shares. So you're probably going to have a similar type of volume out here inside the Qs. I think it's really the IWM that really provides us with the most amount of information. As I mentioned, again, if this thing is able to push lower at all today, then we have, and by lower, I'm just simply going to say, let's say it's got to at least get into the trading session here from August 17th. And that high is 122.50. So far, the low today, 122.64. And that session had 20 million shares. So if you close underneath 121, what is it, 122.50. Then it says you likely go back and you at least test the low of 121.33 out here. So we'll continue to look at that. Now, what is the actual message of the markets as we speak right now, 121? It is bearish. There's no question about it. If we take a look at the summation index, if we take a look at the advanced decline oscillators, they are now all back again below zero. Earlier in the session, around 10 o'clock or so, they were well above zero. Looked like we had plenty, gobs of market breadth out there. The only one really deciding to spoil that is Stanley Fisher. He's the one with the put on the marketplace right here. And that really started off what had already started slightly a move to the downside. Nonetheless, when the advanced decline oscillators, the market breadth is below that zero line, which it is, it says you've got further to run. Further to run would be to take us where? Well, what I would be looking for would be an oversold reading out here. And that oversold reading inside of the New York Stock Exchange is going to register about minus 150 or so, maybe a little bit more, maybe just a point or two less out here. If you take a look at the reading on the railroad, the reading at the last time we saw a market bottom out here, which was August 2nd, you can see the oscillator reading down at minus 149.05 out there. That's when you get those potentially oversold bounces and or bottoms out in the marketplace. If you go back to the lows out here, June 27th, you saw a reading of minus 165. If you come take a look at the lows that were formed out here on the trading session of June 16th, it was actually 2 days earlier where we saw minus 172. So we're not there yet inside the NYSE. We have really not seen much in the way of price erosion either, which is unusual. It's another unusual point out here because as we clearly take a look at the, well, let's do this here. Let's go to a different chart. Make it a little bit easier for you to see. If we take a look at where the VIX index is trading right now, you can see it's above the 50-day exponential moving average. That is the red line on my chart. That's priced at 1346. The last two sessions out here, basically prices closed on the 50-day. We've seen intraday spikes above it. Price by the end of the day comes back and settles right on top of it. I would say that today another price point to pay attention to inside the VIX index, and it's got to do by more than a penny or two, is 1409. If the VIX index, let's just say this, if the VIX index can manage to close, let's say it's a bad close coming in to the end of the trading session out here. So that would suggest then that the VIX is going to trade at 1450 or higher. So any move, we'll call it above 1450 in the VIX, a close above, not move above, but a close above, because we already had the move above, a close above, then says to us the VIX index headed to the 17 and a quarter-ish type range out there as its next move. You close below 1409, and it becomes a little bit ambivalent. If you close at 1346, it's just another draw, another neutral type trading session out here. So those would be the elements. Russell 2000, IWM, look to see how that closes. Look to see where the VIX is trading at the end of the session. If you use those as benchmarks, they will become excellent guidelines as to what move, if any, you should take. Now, how about Goldilocks out there? What in the Sam heck was gold doing earlier today? And let's go put the gold contract up here. Let's go take a look at it. I believe, and that was a nice bounce that we saw inside of gold, but it ran right up into support. Support being Stevie's red line. That's the oscillator unchanged line, and that becomes a resistance level out here. So you can see here's the December contract. Almost hit it. I think it was really, really close. 1347 was the number out here. Of course, the interesting thing about today's session inside of Goldilocks as we speak right now is it's still trading at 1328. Sometimes I have a little delay. 1327 is where it's trading at. If this were to close today above, this is going to be the interesting thing. Come on, work with me. If we were to close above 1330, is that what it needs? No. What the heck? That doesn't look right. 1327.40. There we go. 1327.40. You actually have a bullish reversal signal. What looks like an A to B equals CD. Do we have a full, complete A to B equals CD to the downside inside of Goldilocks? Well, I'll be a son of a gun I'm not even sure what that means, but 1363, yeah, right there. So what you here, I'll show you what this. So here, what gold would actually be doing. Gosh, come on, work with me. We're on the air. Okay. So take a look at the A to B equals CD to the downside, that gold form here. Your A point out here in this move, there's a couple of them. There's a larger one. But the smaller one we're looking at is the August 2nd high down to a B point here, that little doji candle on August the 8th. Makes about a 0.786 retracement. Not really, 74.6, but that's close enough for our work. August 16th is that high. 1-to-1 A to B equals CD to the downside completed yesterday. Today could be, believe it or not, could be a bullish reversal signal. Now, what we know, what you and I know for certain, is that the oscillator on change line on a daily basis, this thing has been supreme resistance. So only if gold could close above that, I'm not talking about today, 1347.10, would it really change its character. But you do have, let's face it, you've got a Gartley buy, you've come into a hammer candle and a piercing candle. The bulls are defending this 13 and a quarter-ish area. Steve Rhodes with TFNN. We'll be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com. Platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com. Tiger TV is an exciting way to experience TFNN programming. See high-definition video giving you crystal clear charts, as well as seeing some of the faces of TFNN's highly acclaimed financial experts with crisp, full-fidelity sound. Catch Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, Larry Pesavento, Think or Swim, David White, Andy Hecht, and Daryl Martin in crystal clear, high-definition audio and video. Tiger TV, exclusively at TFNN.com. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
Couple of questions that have rolled in here. One from a subscriber asking me about the consolidation breakout. Have we seen it just yet? And what this subscriber is referring to is the 64 point, you thought I was going to say 64,000, did you? Consolidation, $64,000 question. And in essence, it is a $64,000 question. Now, if you take a look at the chart here on Tiger TV, and I've been showing this in the newsletter for the last several days out here. So the answer to your question with regard to whether or not we have seen an official breakout of this consolidation pattern inside the NQ, the answer is no. And inside the ES Mini, the answer is maybe. And I think that consolidation pattern that we've got in the ES Mini, that's really priced properly out here at 2165. If this is able to close today back above, I would say the price point out here is going to be 2167. Then it will echo really what we're seeing inside of the NQ. Now, why do we want to pay attention to this? So, one of the problems with the sideways market is just simply that it can be frustrating to trade, and what you want to do is you want to try to identify it as soon as you can. And the reason that you want to do that is because it gives you a nice price projection when you see a break. And in this case here, what we know about the 5-hour chart is that oscillator on change line continues to act as resistance, and that. But we also know that inside the NQ it has not broken down. Now, if it breaks the consolidation, the ES Mini has a price projection of 22 points. So that's 22 points less than about the 2167 mark. In the case of the NQ, it's 64 points below about 4767. So that becomes your price projections out there. And so one says yes, the other says no. Had requests out here, a couple different requests, so kind of interesting on the timing. If I would take a look at the Japanese yen, and then I've got another email that's asked if I would take a look at the correlations between the Japanese yen, the S&P 500 bonds, and so the gold. So we're going to do both. So the first question was really just to take a look at it. The first that I saw was to just take a look at the Japanese yen. So let's go do that out here. Let's go ahead and put this chart up on our screen. Oh, by the way, silver. Before I do that, because we talked about gold, as long as I've got this chart out here. So you've got both gold and silver actually right now forming a bullish reversal pattern and or signal out here. We know that silver, we pointed out, you and I have been looking at it, has completed a 1-to-1, 1-to-1.2, so almost 1-to-1.618, A to B equals CD down pattern. And today, thus far, because yesterday was a little doji out there, it becomes very easy to form a bullish reversal signal. So that being said, I'd rather not just see a bullish engulfing candle. I'd rather see this turn into a three-river Morningstar pattern, which says that you've got to see silver probably close around 1870 or so to get that. Just a little bit stronger of a bullish reversal signal. Now, what that would suggest then, in the case of silver, would you see a price move up to about the 1939 level? That is its oscillator unchanged line. So both gold and silver, as we speak at 133, are giving you bottoming, short-term bottoming signals out here. So, be careful, pay attention to that. Back to the ranch out here where we take a look at the Japanese yen. And please continue to post your request inside the den and send me emails at steve@tfnn.com. Just makes it so much easier to do what it is that we do. So how do you do that voodoo that you do? So if we take a look at the Japanese yen now, here we can see that just like Goldilocks, remember the hop, so this kind of navigates right on into that question with regard to the correlation, right? We took a look at gold earlier. We saw the bounce higher, moved right up into the oscillator unchanged line, rejected it, moved lower. Look at what the Japanese yen did, the same type of setup up here. So here's what it's doing now. What's that impact with regard to the Japanese yen? Well, here is, let's do this. Let me move this back over here. Let's just kind of put that together with regard to this request for the longer-term correlations that are out here. So for longer-term correlations, I've got a weekly chart on my screen. And the weekly chart on my screen, the top portion, continuous contract for gold. Next level, we'll call it panel 2, is the S&P futures contract. Next panel below is the Japanese yen, and the panel below that is the 30-year treasury out here. Okay, so what do we know? We know, just take a look at it as an example out here, when let's take a look at what gold was doing, since that's up at its highs right here. This is back in September 2011. It was making a high. And you also had the Japanese yen making a high. Now, the Japanese yen went on to actually, the futures contract went ahead and made its high. In the currency pair, U.S. dollar, Japanese yen was actually making its low, so inverted here. This is back in November of 2011. So you can see, really the correlation between the yen and gold out here has been really pretty darn strong out here. So we took a look at it today, right? We didn't look at them side by side, but we know what prices did, and we know where prices reversed. So that sends an important message with regard to, hey, where is gold likely headed to? There's also a correlation, although it's not as strong, with regard to the Japanese yen and the 30-year Treasury out here. It's been around for a bit of time, not nearly as long as the Japanese yen gold trade out here, but still around. And then you've got panel number 2 with regard to the ES Mini. And here, what can we say with regard? I think we covered this before with regard to the Japanese yen and the ES Mini out here. Not much. Likewise, we could really say, hey, there is at times a nice inverse relationship between the direction of the S&P and bonds, and then there's time periods where the two just simply correlate together. Which is really what we have been in for the most part since December of 2015. So with regard to 2015, gold's been moving higher, bonds have been moving higher. ES Mini, in essence, has been moving higher out here, and the Japanese yen out here. So I hope that helps you, because the question wasn't really specific with regard to, hey, just take a look at those correlations from the longer-term status out here. Okay, so that takes care of that. Do I have any other questions, any other things to look at here inside the den? I don't know, but if I do, go ahead and type something in. Let's take a look at the light sweet crude. It's flat today. 47.39 is what it is trading at. So let's go see what it is doing, where it has traded into. So you've got the October contract. Where is the yen going? Well, okay, we'll go back and we'll take a look. Well, it's on right here. The yen is. Let me see this again. I can't do it right now. My goodness, Danny, because it says loading data. I probably should not have done this on the screen. Well, okay, there we go. Just because it takes up so much time. Now, in the case of light sweet crude, it looks like today's candle so far, just a little doji, doesn't really have any meaning. No, it just says that the market has kind of lost its steam to the downside out here. We know that we have a nice little reversal signal, a sell the D point that formed with regard to this evening star. But until light sweet crude has got to get below 46.43. And I don't mean just like trade below it. I mean close below it in order for it to move to the downside up here. Otherwise, it just had a very brief, and I do mean very brief, and it could be set up the next A to B equals CD to the upside if it were to take out the swing point from August the 19th. So what can we say about light sweet crude and its direction? Right now it still remains bullish. Has a pattern to be concerned about, but it still remains bullish. Got the Dow off 67 points. S&P is down 6. We'll be right back.
Are China A shares hot or not? If you trade China A shares, now may be time to take a closer look. Trade CHAU or CHAD, Directions Daily CSI 300 China A share bull and bear ETFs. China A shares in either direction. Visit directioninvestments.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction shares. To obtain a prospectus or summary prospectus, please contact Direction shares at 866-476-7523. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors. Distributor Foreside Fund Services, LLC. TFNN is excited to offer a brand new piece of market scanning software unlike anything the industry has ever seen. John Logan and his team have spent years developing their market profile tools to finally be able to release the TAS Profile Scanner Plus. And right now you can get a 2-week trial absolutely free just by visiting TFNN.com and providing us your name and email address. The TAS Profile Scanner Plus is the premier market profile based scanner in the industry, powered by the acclaimed TAS proprietary algorithms, this feature-rich scanner is a standalone desktop software that instantly filters over 2,500 global financial markets such as stocks, ETFs, commodity futures, and Forex. Within 3 minutes of signing up, you can have the software downloaded and running on your computer with a complete roadmap of market indicators and inflection points to trade off using the TAS Profile Scanner Plus. Sign up today and try this amazing piece of software by visiting TFNN.com.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
This segment is brought to you by TFNN. Test drive all the newsletters for free at TFNN.com.
Welcome back, folks. Let's go out to our man, Mr. Z, John in Philly. John, thanks for calling. Thanks for holding. How are you doing on this fantastic Friday?
I'm doing just fabulous.
I like it. I like when you're doing fabulous. And so you called to discuss NDX 100, I believe.
Yes, Steve, I wanted to ask you about the NDX, the Wilshire, and August 23rd. Larry Pesavento shared with the audience Bill Ehrman, and of course Bill Ehrman passed away, but the results of his work identifying August 23rd as a turning point, or excuse me, a point in time linked to prior turning point tops and bottoms in stocks going back decades.
Okay, so all his work was based on decades worth of work to try to identify a timing pattern.
Evidently, yes.
Okay.
And interestingly enough, the NASDAQ Composite made a brand new high August 23rd. The Wilshire and the NASDAQ 100 both came within a point or two of the August 15th highs, and of course we pulled down a little bit. But of interest, the NDX 100 has gone over the 2000 peak of 48.16, but it's now below. And the Wilshire 5000 went over the high of May of 2015, but it's now below. So we've got all these various bits of data. And my question to you, Steve, is: can you see a fairly volatile, severe sell-off beginning here in stocks as a result of all those features?
Yeah, can I picture it? Sure. Let's take things one by one, because I think we may have some conflicting signals. So if we just take a look at patterns where the markets can make significant tops or bottoms, and with regard to the NDX 100 specifically, one of those patterns happens to be when price moves higher, does with less relative energy. And in the case of the NDX 100, it happens to be that August 15th date. And price was moving higher, does with less relative energy. In the very next trading session, you get a bearish reversal signal, referred to as the bear separating line. As reversal signals go, that is a strong one. So the mere fact that Bill Ehrman's work, he called for the 23rd, went on, made a new high, still closed lower, did not negate this topping style pattern that was out here. So the daily chart for the NDX 100 say, absolutely. And with regard to a topping formation that is out there. Now, if we go take a look at, let's just kind of do this, John, maybe like step by step. First, we'll look at the dailies of the NDX and then the Wilshire 5000. And then, I'll ask you for comments as well. And then let's take a look at the weeklies. And then maybe we've got time. Hopefully we've got time for the monthly out here. Because if we look at the Wilshire 5000, this is where if we take a look at, our favorite wave count structure out here, my favorite, I think yours as well, the Chapman wave, this would say, geez, maybe not so fast out here. Because when it made a seventh wave session out here on August the 10th, and that was coming off of a nice low from June 28th, we saw price reverse for a day, trade sideways for a couple more, but then went on to make a higher high on August 12th. So we know that basically recycles. And so that says to me that really the next wave counting should begin on August 3rd. And we're only in wave number 3. Normally we get 4, 5, 6, 7, at least 4. And we don't have that yet. However, the Wilshire 5000 up at these highs out here, does have significant signs of resistance just simply from a candlestick interpretation standpoint. Just like the NDX 100 had a bear separating line on the trading session of August 17th. So too did the Wilshire 5000 on that August 23rd date. In this case here was August 24th for the Wilshire, formed a little shooting star. And the way that shooting stars typically work, John, is that they either work or they don't. And what I mean is that when you see those, if you see follow through on the very next trading session, then that means that candle session interpretation has a high level of a reversal area. So forget about the wave counts, no price relative strength divergent pattern out here. The Wilshire, you can say or argue, is that, yeah, maybe it is giving us a topping type signal. So that's what I kind of see on the daily charts for the NDX and the Wilshire. What do you see that I've overlooked maybe on the Wilshire that you could, or on the NDX as well, on the daily charts that you could share with our listeners?
Yeah, Steve, the only feature that brings my attention is this idea that both the Wilshire versus the May 2015 peak and the NDX versus its 2000 top, more times than I care to recall, in studying past market topping patterns, be it stocks or currencies or commodities, have seen markets go to major prior swing highs.
Yeah.
Go to it, just peak over, and then come back under as a prelude to an important reversal of trend. And I can't help, well, let's put it this way. None of us know what's going to happen the next 30, 60, 90 days. But these formations here are candidates for that sort of feature that has been witnessed, namely a failure at highs and a reversal of trend to down.
No question. And so, and that's a really great point that John is making, folks. I want to make sure that you certainly take that in. And where that would lead us to next, and this means we're not going to go right now and take a look at the weekly charts, would just simply be because what John's talking about is getting to a significant previous swing point, making its way over and then back below is where you can see some real reversals take place. And then what we would do, even though John didn't ask about it, that would then say, hey, we need to go take a look at the Dow, the S&P 500, and I kind of throw in there the NDX, and these are the weekly charts that I show, because I show the Dow at this stage still breaking above its real consolidation pattern out here. If it ducks back underneath, where I've got drawn as resistance, and I wish I don't have my tool out here, but if you're watching us on Tiger TV, you're going to see these rectangular boxes, and if the Dow moves back inside that box, it will have rejected. It'll be another way of rejecting a very important swing point level out there, just as John was pointing out for the Wilshire. In the case of the S&P 500, it's got further to go in order to break back down into its consolidation level. That's right around the 2130-ish type range. The NDX 100, is still not back inside its previous range out here. And the Russell 2000 never had really a sideways. There is a sideways version out here, but it broke above its descending trend line weeks and weeks ago. So, yeah, I know what you're saying, and I think that we would then also, to help answer that question, help diagnose it, because as you said, hey, we don't really know what's going to happen weeks from now. I would say if all three of these come back into the range, then yeah, I think that interpretation is dead on, balls accurate, as they said in My Cousin Vinny.
Very good. Well,
I love that Marissa Tomei, when she was, I thought that that's a great movie. I don't know if you like that movie, but I like that movie.
Loved it. Steve, thanks so much for your help. Appreciate it.
You bet. That was John in Philly, and great call. Hey, when we come back, let's go take a look at those weekly and monthly charts for the Wilshire and the NDX 100 just to wrap this up. We'll be right back, folks.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
If you're an active trader looking for that extra edge when it comes to trading and investments, then now is a great time to get a 2-week free trial to Tom O'Brien's daily market letter, Market Insights. Tom O'Brien's daily newsletter, Market Insights, comes out every market day at around 9:30 a.m. and provides Tom's daily commentary on the broad market, including the Dow, NASDAQ, and S&P, plus specific trade recommendations. There's even an update published most afternoons to keep you informed about the day's market activity. He'll give you the entry price, price target, and stop price of each stock and option trade. With Market Insights, there's nothing left to guessing. For all the details and to get your 2-week free trial to Market Insights started today, visit TFNN.com.
It's 2016 and TFNN has a brand new programming lineup to kick things off. Starting January 4th, swim lessons by Thinkorswim and TD Ameritrade will be airing 5 days a week at noon Eastern Time. Join hosts Scott Connor, Kevin Hinks, and Cindy Faber as they host their daily options program live at noon 5 days a week with no commercials for the entire hour. Nico DeHaan and Paige Clark will be moving their program, Living a Primal Lifestyle, to twice a week, Tuesdays and Thursdays from 7 a.m. until 8 a.m. Eastern Time. Wake up with Nico and Paige and start your day off right. The Bull Bear Binary Option Hour by Nadex will now be live Mondays and Fridays at 10 a.m. Start and end the week with the three hosts, Tom O'Brien, Tommy O'Brien, and Daryl Martin, as they break down the world of trading binary options and spreads. For all the details on the new 2016 programming lineup, visit the front page of TFNN.com. TFNN, educating investors.
Join David White as he keeps you up to date on the latest tech stocks while he uses his Power Law Vector Indicator to identify the best trades. The Power Trading Hour, next on TFNN.
Welcome back. Dow's off 79 right now. S&P is down 7. NASDAQ Composite off 9. Just to finish off the NDX chart, I know we were looking at a weekly chart. Taking a look at consolidation levels. If we do look at the weekly chart for the NDX 100, really doesn't look too shabby out here. No real bearish reversal signal. It has a 1-to-1 A to B equals CD. Price projection that it has still not completed at 4865.34 out here. If someone were to ask me, hey, is this a bearish chart out here? I'd have to say the answer is no. We would take a look at these lines out here. I'll just move them kind of up and down. Here is really your line of that price would need to break below to get back inside the lower part of the range out here, where we saw how these little bearish reversal signals, I'm using the most conservative one, that would give you the price point objective inside the NDX 100. That would give you the price point to be watching at 47.39.75. So at this stage here, the weekly chart says not so fast. That's the NDX. Let's on the weekly. Let's go take a look at the monthly. We're not over with the month. We will be next week. But if we look at the monthly chart, whoa, what the heck happened there? Okay. Sorry about that. Good thing you didn't see that off screen. If we take a look at the monthly chart, and that blue line happens to be that all-time high that John was referring to, so we can see price got over it, dip back below. Price is moving higher, doing less relative energy out there. Never a good sign. But it's only a bad sign when you get a bearish reversal signal, and we don't have one just yet. And price is actually trading just slightly above its oscillator and change line from a monthly basis, and that's actually bullish out here. More likely than not, we're really only in wave 2 versus 7, but the monthly chart is cautious, just like John was talking about, cautious, but not exactly bearish, at least not just yet. In the case of the Wilshire 5,000, if we take a look at its pattern out here, it's got an A to B equals CD that could take you up to 24,121 out here. It would turn more bearish if you saw it close below 22,346.31 to be exact. Now, that's not that much further from where we're trading. We're trading at 22,481. So you could actually see, well, no, you're not going to see that today. That's 140 points. You're not likely to see that today out here. So the weekly chart is not too shabby, actually, inside the Wilshire. That's regardless of the mere fact that Dow's off 88 points right now. And if we look at the Wilshire on a longer term, the monthly chart out here, what we can see is price just almost looks just like the NDX 100 chart, right? Price gravitating to higher highs this month, right? The month of August out here, getting to potentially a 7th wave, most likely only 2, and price moving just slightly higher, doing less relative energy out here. But the monthly chart, just cautious, not bearish, and that is taking a look at the longer-term charts for the Wilshire 5000. What does that have to do with what you're going to be watching today? Probably not a lot. But what you want to be watching today, you're going to watch that little hammer candle low inside of the NDX 100. That price point out there is 2160.75. You close below that, you start moving below that. It really sends a message that likely the next leg down for the day has begun. We're going to be looking at what looks like probably then an ugly close. What you're then going to do is just simply go over, take a look at that VIX index. You're going to say, where is that puppy trading? Here, we're up towards the high of its session. If you close here, this says to me, the VIX index runs to the 1720-ish type level out there. You're only at 1449. You'll see a lot of demolition in the market. Then what you'll do is you'll make sure that you tune in on Monday, Tuesday, Wednesday, Thursday, Friday, and so forth, because we want to go back to the New York Stock Exchange, which is looking ugly as we speak right now. And we're going to want to watch to see when that oscillator reading gets down to minus 150. And you are minus 1.25 right now. So, folks, have a fantastic weekend, a fabulous weekend. I'll look forward to seeing you on Magnificent Monday. Stay tuned. Our man, David White, our polar bear, unless he's on vacation, I don't recall, he's up next. But if not, I'm sure we've got something great for you to listen to. And then Tom from 3 to 5. Have a great weekend, folks. We'll see you on Monday.
Larry Pesavento has just started his brand new service, Fibonacci 24/7, and he's already delivering content to his subscribers on a daily basis when the market's opened and even on weekends. Each Monday, you'll receive Larry's written report that provides detailed commentary and a summary on the charts and videos that Larry sends out. And throughout the week, when warranted, Larry will send out via charts or videos or both the key markets that he is watching during the day. This will be up-to-the-date, active trading information that will help you in your daily trading. In Larry's first week alone, he sent out 25 charts, 6 videos, and a full report to his subscribers in just 1 week. If you're a technical trader that uses patterns and retracements to trade, then Larry's service Fibonacci 24/7 is something that you must try. Right now, new subscribers can get a full 30-day money-back guarantee. With nothing to risk, sign up now to Larry Pesavento's Fibonacci 24/7 by visiting the front page of TFNN.com under Trading Newsletters.
You're watching Tiger TV.